ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today.
All right. Hello. I was looking for an article that I had seen that showed how many people got wrecked. All these dumbasses taking leverage. All right, let's see. Where was it? There was a thing that showed how many people it was almost even on both sides. The shorts got wrecked right as the tariff decisions were being read, and the market went up briefly for a few minutes. It went up, it wrecked all the people that were short, and then immediately and substantively went down, and it wrecked all the people that were long. So it was like within a few hours, it was like 500 million. It's $500 million. You just wonder, like, what are people thinking? Anyway, let's see if I can find it. Crypto market crashes, faces, yeah. This is so funny. People are so stupid. Man, look, if you take on leverage and you lose money on a news event day, you deserve to lose everything you got, everything you're ever going to have, everything anybody else is ever going to have. Just everybody needs to lose all their money. Everybody. Yeah, there you go. That's good. Let's leave that up for a second. So this was just a few hours ago. So there's probably a lot more people getting dumped on right now because dummy's going to dummy. But anyway, the crypto market lost more than 507 million. Here, let me put it right here, and it looks like I'm 507 million. So you're saying it's 577. Let's call it 580 million in liquidations following Donald Trump's announcement of new tariffs, which, he's been saying he's going to do for over a year. So, and he said they were reciprocal for a long time. Even like going into this, everyone knew. And actually, he was kind of nice to some of these countries that are screwing us over. Anyway, over 176,000 traders were liquidated. 176,000 morons. 176,000 idiots. Man, they're going to all be driving Uber the rest of their life. Anyway, Bitcoin, Ethereum obviously were the most affected cryptocurrencies because they took the brunt of the derivative exposure dip or whatever. But despite the crash, many in the crypto sector view this as a long-term opportunity amid growing instability from traditional economic policies. Yeah. I think, but right in the very beginning of this, in 24 hours, a total of 177,000 traders were liquidated, leading to losses. You're saying just shy of $580 million, with 290 million coming from the long positions and 216.93 million coming from shorts. You've got that at 367. The largest single. Now here's a dumbass. The largest single liquidation occurred on Binance in the Ethereum USDT pair, with an $11.9 million loss. Poof. Poof. Isn't this supposed to be 253? Is it? Was yesterday 253? I don't know. I'm not sure. If not, you're going to have two 252s. Okay. The sudden tariffs aimed primarily at protecting key domestic industries and gaining leverage in sensitive international trade negotiations injected fresh uncertainty into the broader financial landscape. No, it didn't. This is the opposite. It injected certainty. We now know. See, this is why I think today is so much better than yesterday. Now we know. Oh, yesterday was 253. That's weird. Well, let's just change that up then. I wonder if I can edit the title here. No, that won't let me edit it. I may have to do it. Let's see. I may have to do it after the fact. Let's see if I can do it. I put a 3 there. Okay. See if I can put a 3 there. See if I can put a 3 there. See if I can put a 3 there. Okay, I think the only one I can't edit is Facebook. Although it didn't really edit this one, did it? Well, doesn't matter. It should be on Facebook. It should be different. No, on the other ones, not Facebook. Here, I'll even switch this one. Yay! There we go. Numbers. Numbers matter. Okay. So you tell me in the comments, do you think that the world is more certain or less certain today, now that we have had all of the tariffs and the numbers read to us? Do you think we are? Do you think there is more uncertainty or more certainty? I think more certain. Yeah, that's what I think. Because now we know. We didn't know. We weren't sure. They're negotiating this, that, whatever. Anyway, traditional equity markets reacted with notable caution and hesitation. I'm curious. Let me look at CNBC. I'm sure those markets are getting dick punched. Dow dropped. Whoa. Boy, that ain't pretty. The Dow is down almost 1,600 points. It doesn't matter. It's a bunch of bullshit anyway. Man, the stock market goes up for the sake of the stock market going up. If it was all based on fundamentals, well, it'd be a different story, wouldn't it? Anyway, Dow's down 1,583, S&P's down 251, NASDAQ's down 1,011. So, I mean, they say a crash is 5%. So I guess you could say the NASDAQ is crashing today and everything else is near crash. But in the crypto space, that's kind of normal for us. Like 5-10% is kind of just whatever. That's why there's the big upsides, because there's also there was a guy that used to say, you don't deserve the 38,000% upswings if you can't stomach the 85% downswings. Fair play. Oh, by the way, for those of you, I've been talking about this fast that I did since Sunday morning. Guess what ended today? And I now have creamer in my coffee again. And let me tell you what a difference it is. If that was the only thing I changed in my life, is creamer. Worth it. This the difference between just coffee and coffee with creamer. Oh man. Anyway, so stock market's getting beat. They are saying that the Trump tariff fallout is beginning with layoffs, right? So like a bunch of companies, let's see, after Donald Trump signed an aggressive and far-reaching reciprocal tariff policy at the White House, Trump's plan set a 10% baseline tariff across the board. It imposed steep tariffs on many countries, including 34% on China, 20% on the European Union, 46% on Vietnam, 32% on Taiwan. Taiwan Semiconductor is actually coming to the United States to build a facility, which is awesome. A lot of people can't look past, for some reason, they can't look past their steering wheel right now. All of this stuff is pro-America. This stuff is very pro-industry, but it's not, at first you got to rip off the Band-Aid of bad governance, and that's been a while. Economists and U.S. trade partners are raising questions about how the White House calculated the tariff rates it claimed other countries charge. It doesn't matter. That's what the tariffs are, bro. The tariffs are what they are. Steve Mnuchin is going online saying, hey, I hope the Trump reciprocal tariffs will be negotiated down. He's the former Treasury Secretary, former because he sucked at it. We ran up the credit card. We ran the credit card, the U.S. credit card up so flipping high under the last administration. A very nice, quiet administration. Maybe that's the problem. They didn't ever say anything. So anyway, Steve Mnuchin was a former Trump Treasury Secretary who, to be honest, he didn't do crap either. So I really don't care what he has to say, but we should listen because, listen, if you've ever run the Treasury, probably means something. And I don't know if I liked him any different than Janet Yellen. Janet Yellen was capable maybe a few years ago. And I mean a few, like 20. She kind of passed her prime. But anyway, she's very smart. Janet Yellen was no dummy, but she aged out, I think. She just kind of aged out. Anyway, that's a derivative. Mnuchin said he believed that the market can adjust and that the new 10% baseline tariff on nearly all other countries, he kind of was okay with it, but he hoped that the larger tariff rates will be negotiated down. That will happen, I believe. I think this is all just negotiating fuel. But he said, I do hope there's ability to negotiate them down because we've seen for certain businesses, it's going to take a long time to move the manufacturing base. Yes. And we've seen the stock market, particularly in certain stocks, react pretty negatively. Yeah, good. I hope the stock market reacts negatively. A bunch of crap is overpriced and it needs to get its butt kicked. It has to. Yeah, I know. Remember that? We'll never have another recession. Why on earth would anybody say we'll never have another anything? I mean, I can say with conviction we'll never have another Cardano token in the top 3 of the crypto world. I can say that pretty convincingly with Moxie. It doesn't make it true, but you don't say stuff like that. Like that's like saying we'll never have another. The sun will never rise again. Like Miss Yellen. Shh. Anyway, when people look at the stock market and they say this is what's going on in the economy, that's always a flaw. This is important to understand. And that is that the stock market is not the economy. There is the economy that we live in and that we go and buy gas and buy stuff at stores and we eat those things and we consume stuff and we live some places. Sometimes we own, sometimes we don't. That's the actual economy that we live in. The stock market is a financialized derivative of the economy where everybody doesn't participate. A few people have preferential treatment when it comes to the dissemination of information, and they act in their own everybody's trying to act in their own best interest. And they misinterpret interest rate cuts as money. It ain't. They misinterpret quantitative easing and tightening. They think easing is spewing money into society. It's not. It's bank reserves. Never leaves the banks, and the banks can't do anything with it. And they look at tightening as a chokehold on the economy, pulling money out of the economy. It isn't. It's the opposite. Because if you reconstruct in your mind what quantitative easing is, the Federal Reserve taking quality collateral away from banks and giving them bank reserves, showering them with bank reserves, that doesn't entice those banks to lend into the economy. So if they're not lending, nothing's happened. It's just a balance sheet swap. It's no different if you move some coins. If me and Howard trade some Libera tokens across our MetaMask wallets. Nothing in the world has changed. It's just an account swap between our wallets. It's the same thing. QE is an accounting machination. It is a nothing. It's big. It's not even a nothing burger. There's no nothing to burger. It's a vacuum. Nothing has occurred except it's actually that easing has a restrictive kind of tendency to it, because when you're stripping quality collateral, especially short-term stuff, treasuries. So, you look at the curve is bills in the short end, notes in the middle, bonds in the end. If you're stripping quality collateral, bills, notes, or bonds from these banks that they would be pledging into repo so they could earn more money, if you're stripping that and giving them bank reserves, you're giving them nothing. You're giving them no reason to lend. You're actually constricting the economy. So not only does QE do nothing, it does less than nothing. It does negative something. And, oh God. And so, but in the financialized economy, the stock market, it goes up because it goes up. And then it goes up because of easing. Why? Well, because the economy's in trouble. Yeah, it's going to go up. Why? It's made up of, but it's made up of companies that are failing. Yeah, but free money. What money? There's no money. Free money, bro. And so a bunch of dummies, Joe Six-Packs, retail morons, only marginally, like 2 IQ points better than meme coin traders, they start buying a bunch of BS stocks. Some of them are pushed into it passively through passive indexation. Passive indexation effect is, and Mike Green talks a lot about this, but this effect where if you're part of these retirement funds, pension plans, and all this that are aggregate buyers, you put $10 in, they take that $10 and it shoots out into all these assets. So it's constantly buying. So you have this passive indexation effect. Every dollar that goes in starts buying. It creates buying, right? Because there's no real management going on anymore. It's all index. So buying. Oh, the market's doing bad. Oh, they'll cut rates. Oh, they'll start easing. So this whole idea that the stock market at all matters related to the economy is just bullcrap. It's all bullcrap. And they say, well, we want, people's retirement. Oh, really? Is every of the people, do they all have exposure to the stock market? No. Like what was the number? Was it 1 in 8 Americans? 1 in 8 or 1 in 8 or 1 in 6? And then what is the representation of the companies? Only 1 in 100 make it into those buckets, like the S&P and stuff like that. Well, even only 1 in 100 companies are even in the stock market. And then of those, a very, very, very tiny fraction are the loved ones, the ones that get that exposure to index funds, stuff like that. So it's a joke. The stock market goes up for the sake of the stock market going up. And they say, well, easing. Oh, the stock market's going to go up. Free money. There's no free money, man. There ain't no free money, because the money that's printed out of thin air, it's not even free. It costs us money because it's robbing from the future. It's stealing future prosperity for the right now. Very frustrating. So when these people push this kind of thought, they're pushing it on dummies, or they don't know themselves. Yeah, passive indexation works in both directions. When there's net selling and there's no buyer of first and last resort, then there's only selling. But we haven't seen the downside of passive indexation yet. We haven't seen index funds really dump. We've only seen the plus side of it. It's like how does he explain it? He says it's like a car with no brakes. You can drive uphill just fine. The problem is when you start going downhill, then you realize, things are bad. Okay. By the way, Trump also closed the de minimis tariff exemption for China, meaning, so the de minimis exemption, if you don't know, was that it was between China and Hong Kong and the U.S., and it allowed shipments worth less than $800 to enter the U.S. duty-free. And that had helped China, like Temu. You remember Temu and Shein Food? they could send in, like, I love me some Temu, but now Temu is going to get quite costly. Well, not quite costly. Stuff's still cheap, but not the same. We're dealing with it in the car side. All of these cars that we buy just got a lot more expensive. But on the other side of it, all the cars that we wreck, that insurance companies have to pay for. Well, we don't wreck them. If they wreck, the drivers wreck them, and the insurance companies have to cover it, they have to pay more. So we're in a position right now. We have three oddly, all Lamborghinis, 2 Uruses, and 1. Let's see, I guess it's a Spider Huracan. Anyway, now, as up to yesterday, that would have been $1 million worth of car damage. Now it's probably, I don't know, 1.4, 1.3, 1.4, depending on where they come from. So anyway, yeah, crazy. Am I right? Anyway, so yeah, the de minimis deduction is gone, meaning the little cheap, cool stuff that we were getting from China, that's probably not going to happen now. Yeah. So as far as the layoff situation, we will see. We will see if companies begin pushing people out now that they have clarity on this. This is when we'll see the real economy, I think. So I'm kind of happy about it. I also feel like crypto-wise, this is probably the fallout from this, and of course, tax season is a week and a half away. But I think on the other side of that, I think we've bottomed out, at least near term bottomed out. Well, it's all relative. Our insurance costs don't go up because we make the drivers insure the vehicles they're renting. Yeah. So we don't have to raise our rental rates. And also, we were not excited about any of the cars this year. I know this is kind of a derivative discussion, but Lamborghini put out a bunch of basically half-ass cars that are just not all that interesting. They put out one cool car and a bunch of crap. And while technically the cars are better, they look like crap. The Temerario is the replacement for the Huracan. It's $100,000. Well, now it's $200,000 more expensive, and it just looks like nothing. It's just a big old nothing burger. And so it just looks terrible. So we didn't buy one of those or any of those. The Uruses, the new SE is crap. It's a hybrid V8 instead of a V10. People love the V10. It's the best V10. They love the V10. It's a good V10. Anyway, that's gone. So now they only have the SE, which, whatever. It's not that interesting looking. So that's crap. Mercedes put out their electric G-Wagon, which is, they made it look kind of effeminate. I don't know what Mercedes' problem is, but yeah, it's just what a dick punch. Anyway, so yeah, there wasn't really a lot we were going to buy. We didn't buy the Revuelto because it started dropping in price so fast that we were like, this car is not that interesting anymore. The early ones were like $1 million, and then within a month they had dropped to below 700,000. We were like, ooh. Oh yeah. Let's hope Rolls-Royce builds their new car here. Otherwise, woof. The Nightingale, top secret project. What? Most popular rental is going to be that's going to be between okay, in SUVs, it's between the Bentayga and the Cullinan, only because the Bentayga is cheaper, but the Cullinan is like classier, so that's probably the best one of the big SUVs. The G-Wagon is probably all around the most popular rental. People love the G-Wagon. It's affordable. You can get one for $300-400 a day. Well, $350 to $550 depending on what kind. If you get an AMG, then it's going to be about $550-600 a day, but still pretty good for a $240,000 car. And then in the exotics, it's going to be the Huracan, the Lamborghini Huracan. and of those, the drop top, the convertible. Yep. And then on the high end side, it's the 750S, the McLaren 750S. Yep. All right. Okay, let's keep going. There's more to talk about. Okay. Yeah, drive infomercial. No, not really. Most of the people here are not. I don't think there's anybody here that's ever rented a car from us, so it's not really a commercial. Let's see. Are you seeing a rise in business after the fires? Saying or seeing? Do you mean seeing? There's definitely going to be a lot of building going on in the areas that were affected. That's for sure. Let's see. So we become exporting our jobs. Some of us have already forgotten what we went through during COVID because we didn't make anything here anymore. Big picture. Well, it wasn't just COVID. Sherry, there was globalization for many decades. Globalization, meaning it wasn't just COVID. COVID was the main thing we got from COVID was that you can tell the whole world to be grounded and they'll just say yes. And then anybody that says it's bullcrap, they get ostracized and canceled. And then later on, you find out they were right, or they were at least not as wrong as you thought. And they were like, water under the bridge. And then when you give a bunch of free money to a bunch of morons that are sitting on their couch, they're going to do stupid crap with it. Where's it going to go? Into the stonk market. And it's going to make a couple of people like Roaring Kitty rich because a bunch of idiots basically handed him their money. Just a bunch of fools, ignorant fools. And he's a bit of a scumbag too. I'd like to slap the raw piss right out of him, but that's a whole other thing. There's a couple people I'd like to beat up. I would say BitBoy, but he's in jail. Anyway, yeah. So COVID taught us to use money we shouldn't have on stuff we shouldn't buy. And it created a weird supply situation, a supply shock, in that a bunch of people bought up the stuff that was here. And so then a lot of people thought, well, this is the way the rest of the world's going to work this way forever. Free money forever. And to an extent, I think that's going to be correct. On the other side of artificial general intelligence kind of circling the globe and all that, I do think people are going to live a sustenance economy because of all the other currency units that are going to be created kind of in the couch cushions. So I think, people will be, instead of managing people, you'll be managing agent managers, and those agent managers will be managing, your digital agents doing all sorts of clever and crafty things. And yeah, there's going to be a lot of money to go around, but there's not going to be a lot of jobs to go around, a lot of physical jobs. This is why I'm so excited to get one of these robots. I want to grab one of these robots and kind of see what they can do and see over time. They look pretty badass. The figure robots, they look really cool. Yeah, but that wasn't just COVID that did that. That was just overall. And companies, listen, if you're a corporation, your job is to maximize shareholder value. That is your only job. So if you go, well, if we're doing anything in bulk, we need to be outside the United States manufacturing. You go. You just go. The Tesla one is not the one that I'm interested in. The one that I'm interested in is the figure robot. Right now, the figure one looks, although there's some cool ones out of China, although now they're 34% more expensive or whatever. Yeah. But yeah, the great export of everything wasn't COVID. The great export has been happening for 20 years, maybe more. And so now there's a financial come to Jesus, and a lot of these companies are going to have to participate. And if they don't, they're going to get wrecked. I think it's a good thing. I know that no one likes it at the moment that it happens, and it may make some things more expensive. But it's going to bring a lot of production back to the United States. I think it will level the trade playing field, which has not been level for 40 years. So I think all this it's a necessary little bit of pain right now, but I think in the long run it's good. Yeah. No, agreed. Yeah, the fire was a direct hit here, yes, but that's going to bring a lot of building jobs and a lot of construction. There's going to be, once that machine starts going, the construction machine is going to be like, but that's going to take a few years. And it also made LA real estate a little bit more expensive, because there's less real estate. A lot of it got burnt and charred. So yeah, there's a lot going on. Anyway, so a lot of people got wrecked. A lot of people took leverage. Some are calling it the crypto national emergency, which that's a little boastful. Crypto investment strategist at 21 Shares told Cointelegraph that while markets experience significant volatility, the tariff clarity could be a good thing in the long term. I think it's a good thing. I think we've gotten more clarity now than we had. Crypto markets dipped after the U.S. President Trump's declaration of national emergency and sweeping tariffs on all countries as part of his latest salvo on the ongoing trading war. The Trump administration, okay, you guys know all that kind of stuff. So great. So all that stuff happened. Boom. Reciprocal tariffs. The crypto market briefly went up at the news of a 10% sweeping tariff, but then once he brought the chart out, it dipped. And so it hit a session high of 88,500, which is now down to like 81,000 change. It dropped 2.6% back to 82.8. Meanwhile, Ether dropped over 6% from one point it was 1934 to the mid 1700s following the tariff announcement, which is weird. It's weird that Ethereum is affected, at all by this. That's actually pretty strange to me. I don't know. But people trading it panicked, and this is what you get. The Crypto Fear and Greed Index, which measures sentiment for Bitcoin and other cryptocurrencies, returned a score of 25. This is classified as extreme fear. Here, let me show you. Show you the index of extreme fear. Hold on. 1, 2. I got to get the little cool picture. Fear. So this is where we're at. We are at the fear and greed, extreme fear. So some of you might think back. You might think back to some things that Warren Buffett has said about these kinds of circumstances. I was thinking this morning while I was brushing my teeth, I said, where is the bottom in this? We got this. Now we have clarity. I think the bottom is whatever is the aggregate day that most people pay their taxes. I think that day we've bottomed out. When people have paid their taxes, I think we bottomed out. So is the 15th when you have to pay by the 15th? I guess a bunch of people push it off. Well, you can push off your filing, but you still have to pay. Isn't that how it works? So I think that's the bottom. I think the 15th or 16th, if that's correct, is the bottom. Well, I don't know. I don't know for the year, but I think it's the near-term bottom. And again, all the news around Bitcoin and Ethereum and these other assets, all the news is very positive. Look, Vitalik Buterin, he's working again. Vitalik is back. That right there, just the fact that he's back should have Ethereum at 4,000. So I think you just have people that got punished. So it's like the abused spouse, right? That just like every time anyone raises their hand, they cover up. Oh, they react. So I think that's where we're at. And a lot of dummies got nuked, but that's going to happen. And you should keep in mind that if the economy gets demonstrably bad, as far as the numbers are already bad. We've been in a recession. It's very obvious, but no one wants to admit it. But when they admit we finally hit a recession, you're going to get panic, turmoil, interest rate cuts. Obviously, does it do anything? No. But does it improve investor psychology? Yes. Okay. And you're going to get, at some point, probably some QEs or not QEs Does that make a difference? No. But does it make people think it's a difference? Yes. Will they react? Yes. Will stock market go up? Yes. Will risk assets be back on again? Yes. Crypto? Yes. So that's the game, right? So soon will be where bad news is good news. Right now, bad news is bad news, but bad news is about to be good news again. Anyway, obviously the stock market is taking a kick in the pants, as you know. These tariffs should bring more certainty to markets. I know everybody. It's a case. I think it's uncertainty relief. Maybe some uncertainty relief. In BTC markets, trading volume surged 46% as traders scrambled to reposition. Big players took profit on the spike. Smaller investors hesitated. Oh, I would have played the crap out of those options. Man. One of these guys said, all jokes aside, you will likely be liberated from your portfolio if you attempt to trade the upcoming volatility for the next few hours. If you don't have an edge, don't even try it. You will get crushed. Markets won't move rationally, and all will be over before you can figure out what happened and before the market digests what's going on. So remember, markets can behave irrationally a lot longer than you can stay solvent. You've got to be, you really have to put on your long-term glasses, and not as long as, I mean, I really think you only have to, you kind of can wear 6 to 9 month glasses right now. I still think this year is going to see well over $200,000 Bitcoin. I think we'll see, I think we'll take out 4,000 on Ethereum. I would be really shocked if we didn't, especially, again, that Vitalik is back and he's making changes, and the Pectra and updates and things like that are looking good. So I would be just super surprised. Okay, so that's what it is. You can do a 4-month extension, but you got to pay. Gotcha. All right. Kirill, anyone not making educated speculations at these lows deserves to be left behind. Yeah, I think so. We talked about it. We'll talk about it behind the wall, but we have our right now play, which a lot of you guys know about, and we're doing the right now play. I've been buying equity. Well, the private clients, we bought equity in Libera, and they're now getting ready for their token launch. We don't know when that's going to be, but it's going to be sometime in Q2. I'm kind of liking these plays where I can do tokens on one side and equity on the other side, because some of these companies that are kind of more picks and shovels, Libera is a picks and shovels play to me. I like that. Oh, by the way, unrelated, but you guys know you can start like really building your twins now. Where is that PDF? Hold on. Let me get that. Let me see if I can put it up. So they reached out to me. I posted these in the chats, but still, it's pretty cool. Let me see if I can grab it and throw it up on the screen. It's tricky. Sometimes Telegram really moves the stories fast. Oh, yeah. Show and Finder. Let's see it. Oh, cool. Let's see. You guys ready? Bam! Let's see if there's anything. Okay. So I think create your twin. You guys can see this. Let me take this off. Let me take it off. What? No, it's the wrong thing. Okay. So for those of you that don't know, now you know. Anyway, create your AI twin with twin tokens. So you can sign up for Twin Core membership, unlock your Twin Vault, AI twin creation, automation, tools, and points dashboard. This lets you kind of you'll be able to manage your vault from there. You can buy twin points, which tokens are also points. I think it's like $12 worth of tokens or something. It's very minimal. Twin points provide access to your twin and can be converted from twin tokens into points. Great. You're thinking, why points? Because most people are going to interact with the twin ecosystem, not through crypto. Some of us will through crypto, but not most people. Purchase twin points using twin tokens or other cryptocurrency, Ethereum, USDT, or fiat via credit card. That's where you would assume most of the action is going to be, is in the fiat market. Twin tokens provide blockchain power to your twin vault. Twin tokens are automatically added to your vault when you purchase a twin core or twin horizon package. Twin tokens must be added to your twin vault to create your twin. Because it costs money every time your twin is communicating and all that. It costs money, and it costs money to maintain that encrypted database. Anyway, users who access your twin will pay using twin tokens. So that's kind of cool. And then it had this little bit about AI twin creation. I wonder if I guess I could make that one bit bigger. So AI twin creation, including the avatars, if you want to do it that way. We're building one, or they're building one with us for a Node Market. So Node Market will have kind of a twin, a robot that will help you do stuff. You're like, I'm trying to do this. It'll be like, well, just go over here and touch this button and do all this. So we'll have a robot twin that will become at some point active on Node Market here. Well, as soon as it's built and tested. Anyway, AI content creation, voice and media automation. You'll have your twin vault. You have twin agents that can go do little twinny stuff for you. AI to AI communication, which is kind of cool. You would think they would want to leverage Hypercycle. They had those meetings early on. I don't know where they are now in those discussions, if they're still doing that, but they were talking about that. So anyway, yeah, twins. Yeah, but I don't think it'll be Brandon. I think it'll be a robot imbued with Brandon's technical savvy, but it'll just be a robot. Okay. All right. So great. I mean, I think there is now more certainty than there was, and I think there'll be even more certainty after tax day. And let's see, am I doing Filecoin as a long-term or sell the pumps or both? Well, that would be a trading type thing. All of my investments are long-term. And then occasionally I see what looks like an opportunistic trade. So I can tell you that Filecoin for me is a long-term one. I was in on the original Filecoin ICO, and it was $5, and it was just over $5 a token. So in my mind, the company is better. The ecosystem is better. It works. We're years into it now. That was 2017. So we're years down the road. It does work. A lot of people use it. I think it's the most interacted with blockchain, and like in the world by a big margin. And so, yeah, it's a long-term one for me. And I like this mid $2 price, $2.50, $2.40, $2.60. I like it. Can a twin be accessed? No. You can have 1,000 people. Your twin is what you create, but there can be many instances of that twin. It's not like a physical thing. It's a software thing. It can spin up many of them. Your twin can be interacting with thousands of people at a time. If you had such a twin, John. Yeah, I think everything is stupid cheap. It's gotten to the point where I start looking at stuff and I'm like, well, let me just look at the 90-day and start making decisions there. But I can't pull the trigger on anything until my tax person tells me what kind of check I have to cut. I guess my taxes are being filed as we speak. And she's like sorting it all out. So I have my crypto tax guy. He sorts out all the crypto stuff. And then I have a tax person that then takes that and then does all their stuff with that. So that's where we're at. So once I know what that number is, then I know what I have left. And I know I should be one of these people that like use the business, put your assets in the holding company, borrow against the assets in the holding company, own nothing, pay no taxes kind of person, which I will be, but I haven't set all that crap up yet. So until all that crap is set up, now I will be on my equity positions. I will be borrowing against those. So those will be straight debt situations. I want to be in a lot of debt to myself. Anyway, so there's that. Another discussion for another day. Okay. Anyway, markets thrive on certainty, and a lot of the speculation is now largely gone. We know now what the terrible tariffs are. We know how tariffable it is. Great, but we know. So since we know, institutional investors might see this as an opportunity, and over the coming weeks, I think they're going to take advantage of compressed valuations and these low prices. I was reading an article, Bitwise CIO Matt Haugen, he did an interview with Cointelegraph, and he's the CIO of his company, and he basically thinks this is like a wonderful time to be buying Bitcoin. He said, if you've ever wondered when is the right time to buy Bitcoin, it's apparently now and always, yesterday, today, and tomorrow. But I kind of like I sold some Bitcoin at 77,000 last year after the election, like right after it, and that was the first chunk of money I put on my house, because I'd just been renting for my whole life. So I was like, oh no, okay, and that was Bitcoin that I bought only for that purpose, to catch the appreciation. I bought it at 37,000, something like that. So to catch the appreciation, to only throw it at the house, but I might be able to buy that Bitcoin back. So that's what I'm looking forward to. So I'm gonna like the options play I will make, I'll tell you, is if I was, and again, I'm not structured to do this right now, but my play is going to be to put cash in my, my traditional trading account and sell cash secured puts against Bitcoin at 77,000, because that was my exit price. So I want to sell that and grab some premium. So I will get a discount if I get put in, which, I don't see it, but maybe if I got put in at 77, 76, 75,000, that'd be great. That'd be absolutely great. So anyway, Haugen, in this discussion, he laid out this pretty compelling argument. He said, Bitcoin's early days were filled with a lot of uncertainty. You had technology risks. You have regulatory threats. You had the Elizabeth Warrening choke point. You had all this crap. I mean, just continual nut kicking, trading inefficiencies, reputational concerns. And you fast forward to today. Most of those risks are gone, or at least significantly diminished. You have Bitcoin ETFs. You have adoption by major institutional investors. Even the U.S. government has created this strategic Bitcoin reserve. Bitcoin. And it's Bitcoin is here to stay. Like, period. And so right now, the Bitcoin market is less than 10% of the overall gold market. So it makes sense to me that Bitcoin will at least match gold. So, and that's just along its path, along its trajectory, right? I guess along the path. But there's the 10x. Some people yesterday were like, what's the next 10x? It's probably Bitcoin, man. I mean, it might not be the next one, but it's one of them. I think people would be stupid to ignore Bitcoin. And I know people are like, well, I want to make my money in the altcoins and bring it back to Bitcoin. Yeah, I know. And it sounds good. And mostly that might work, but you also need some Bitcoin. And you can monetize that Bitcoin by selling options against it. So there's really no reason now not to have it. Again, you would have it through exposure through like derivatives, but still, yeah. So there's your 10x or 11x, like right now. This guy also went on to say Bitcoin's the long-term price potential based on institutional adoption accelerating over the next several months and years. So he's thinking that's going to push Bitcoin to new highs. His general thesis is there is too much structural long-term demand, and a lot of the uncertainty that existed no longer exists. So we're in the bullishest, I didn't cuss, the bullishest time as far as at least these main kind of core assets. It doesn't, there's no, I mean, every piece of good news you could have wanted, you got it. The macro is important. The stock market getting its ass kicked today. The macro is rough, recession here and there, but go look over time, over the dips in the economy. Bitcoin has fared quite well in the long run. So there's never been a point ever where if you bought Bitcoin in the next 4 years, it won't be higher ever. So to me, that's good and gives me a little bit of reassurance. And when I buy Bitcoin, I don't even worry about it at all. I'm like, oh, well, it goes down, it goes up. That's Bitcoin. That's just Bitcoin being Bitcoin. You know what I'm saying? So, yeah, I just think a lot of uncertainty is now gone. And, not Bitcoin tattoo time. I'm not like Novo Gratz. That guy's a douchebag. I'm glad they whacked him for $200 million. And he's lucky he's not indicted on like worse things, but $200 million is $200 million. Galaxy Digital is there's an investment facility that doesn't make money. All they do is hemorrhage cash because he's so smart. Remember, this is the dude that he got bounced from Goldman Sachs, and they wouldn't say why. He got fired from his own fund that he started, Fortress. And his partners wouldn't say why. You assume it's drugs and alcohol. Because the guy looks like he parties a little bit. He couldn't open up a shop here in the U.S., so he had to go to Canada to open up Galaxy. And they lose $200 million fine. They lose hundreds of millions of dollars a quarter. You can say that because they lost $200 million this quarter. So they lose hundreds of millions of dollars a quarter. That's not... And yet they still cart this a-hole out on CNBC and have him talk about crypto. And he says this, all of his stuff is bumper sticker, fortune cookie bullcrap. And he's not a dumb guy. Like, he talks well. He's a great salesman. But you can tell that he's a deer in headlights when it comes to really understanding what's going on in crypto. He has no clue. And the people around him have no clue. And they don't do math. They're the ones that were super, super behind Luna and their stablecoin that pays 20%. Why? Because all these asset managers could take on a bunch of money and park it in that stablecoin and get 20% a year and just be rich. Oh, it's easy. Running a fund is easy. You just put it in Luna and UST. You just get rich. Just get rich, bro. You take $1 billion, you're doing 20 points a year. That's $200 million in profit. 20%, there's $40 million in my pocket, bro. And a 2% management fee. See? It's easy. Managing money is easy. No, it's not when you invest in a bunch of bullcrap. Anyway, like obvious bullcrap. Let's see. I feel bad for a lot of folks in here because I know this hurts. Thankfully, it started as a hobby and has been never been family money, but mentally you cannot stop those feelings. Yeah, you can. You can stop the feelings. Let me see. Oh, you had a question here. Let me go back to the question so I can get back in the conversation. Nick, spent close to an entire month of October in the hospital, in and out the next 4 months. Lost my mental acuity. Didn't look at portfolio for months. Once I did, it was down 50%. Figured it was just me as I mentally couldn't handle. No, it's everybody. Everybody got nuked down. Everybody did. Some moves, but should be bad for the deep. But it should be this bad, or the DPC's down. Well, I mean, that's a yes and no. I don't know if that's something I should probably talk about like in a regular public broadcast, but no, we're not. We made an investment. We had a $5 million investment a few years ago that's on paper worth over $1 billion. So no, the digital private clients are not doing bad, but I don't want to be all like woo woo when everybody's getting their ass kicked, because my crypto portfolio, this was an equity play. My crypto portfolio is getting crushed like everyone else, but it's all relative. Like if you go up a 6x and come down half, you're still up 3x. And for those of you that are using programmed exits and are being precise about that, and you're not letting your emotions manage you, then your portfolios are probably doing fine. So remember that the high watermark is an imaginary number. Oh, I got up to this, therefore I'm that. You're not that. You're not your portfolio. When I always look at the bottom, the bottom of these cycles, because I've been through many of these cycles, and the bottom of the cycle and the top of the cycle, and where you are is somewhere in the middle. And if you're really smart and you are emotionally stable, meaning you have zero emotion about investments and trades, then you should be from 50% above in that top half, but really in the top quarter. What do they say that the top quartium? Is that the word you use? Anyway, you should be in that top quartium, if that's the word, of from your high water mark. So if you got up to 1 million, right now you're probably between 600 and 750,000. You're doing fine. Now, if you've come way, way down, then it doesn't mean you've done anything wrong. The whole market's come down, but you've got to see where your portfolio, was it weighted in certain things that are more or extremely volatile, or very low liquid. If you had too much money in low liquid stuff, you get whacked. And that means you're probably gambling. And that means your issues are position limits type issues. You're over investing in stuff that's kind of crap. But the idea that, let's see, aside from equity plays, I'm wondering if I missed some. Well, no, you didn't miss any major principle. You can be really good. You can be really lucky. You can be a cheater like the guys at Ripple, or you can be first. Well, being first is kind of nice. And so, if you get in first on a lot of these plays, then when it looks like it's really low, it ain't low for you. So that's another thing, is the way you enter these positions and how you do it. And again, some people have 25, 30, 50% of their money in Bitcoin. You think they're down 50%? No. No, they're still up. They're doing just fine. Even at 80, at 70, at 60, at 60,000, they're still up. Because they started this journey in the mid 30s or the 20s in Bitcoin, or they've been selling options against it. So they've been earning some yield against it. So they're grabbing 28 to 38% a year extra on top of that. And then they're selling against that. They're selling against the stuff they're selling against. So I think it's all perspective. I think, was this the day you were going to sell? That's the only watermark that matters. Was this the day you're going to sell? In my mind, I have a number in my mind, and I say, if the market got to a certain point where, because in my mind, I say, I don't ever want to be in a position where everything's not paid for. I don't like borrowing, loaning, anything. So if I got to a position where the amount I owe on my house, my account was down to that, I would liquidate the whole thing, pay off my house, and start over. Just, but I'm lucky that I haven't had to be there. But everybody's got a number. Mine, is, everybody's different. But I'm not emotionally tied to my portfolio. And I think a lot of people are. The number doesn't mean anything until you exit. That makes sense? So, yeah. I think the market is more certain today than yesterday. I think it will be more certain after tax. Let's see, Kenneth, if you're down that far, you're down 75%. You're down 75% from your high, correct? But that's probably not the way to look at it. The way to look at it is all the cash you put in, how you've set up your portfolio, what that number is. I doubt that you're down from there. Yeah, you're down 75% from your high. That's fair. Think about people that have all their money in Cardano, like Charles Hoskinson, right? His whole fortune is in it. At one time, he was an uber billionaire. Now, not so much. He's a little less rich, and he certainly can't sell. So, yeah, I mean, it's all related. It's all relative to kind of how you entered. Again, I don't think I don't think that thinking about your all-time high as the measure of who or what you are is a way to look at it. No one knows what the high is. No one. Look, I made a terrible play. I'm still in it, and I'm staking and all that, but I made a terrible play last year. I converted Bitcoin at like 40, 44 or 40, 44, 46,000. I have to go look. I converted it to Ethereum at 3,100. It's almost half. So Bitcoin doubled and my Ethereum got cut in half. So that is on paper right now. It's a terrible trade. But I still think if I go back to that moment, that was a good trade when I did it. It just didn't work out. The world just doesn't do what we want because it's all the reason and logic, but doesn't mean a decision is going to be correct. It doesn't mean you're going to nail it. So that's probably a trade I'm going to end up losing on. Great. You know what? I'll sell it, buy it on another exchange, take the tax write-off, which will be some kind of consolation prize. And I'll buy the same thing back. And then when Ethereum options are available, I will sell options against Ethereum, and I will slowly if it takes me 3 or 4 years, I'll just churn it back. But emotionally doesn't bother me. So what? It didn't work out. It wouldn't have made sense for me to stay 70% in Bitcoin either, not going into what I thought was a bull market, which we had. We had a bull market, and I still think we're in a bull market, but we're just in a very weird, tumultuous place as far as the news cycle. Again, getting better every day, getting better, especially today than yesterday. But you can't calculate from your all-time high. And I'll say this too. I made that Ethereum trade early last year. My all-time high I hit in December. And that all-time high in my crypto portfolio. And also, I keep these as separate buckets. My equity portfolio is 15 times more than my crypto portfolio. But it's kind of illiquid, so I don't really count it. It's kind of like a weird, anyway. So I pretend it doesn't exist. I just pretend it ain't there. And so I look at my crypto portfolio this is what I'm doing right now with my hands in these markets. And over the course of these cycles, I always go way up and I hit some magic number, and it obviously deteriorates and degenerates down. And then I go to the next highest number, and then it gets beat up, and then I go to the next high number. And so it's easier to buy and invest now because I know that if the things that I think are quality, I'm getting a really good deal on them versus what was going on in December and early January and like a late November is I didn't know what to buy or if I could buy anything because I thought, well, I guess I missed the train on a lot of this stuff. Well, now this thing has retraced and I can go back into what I believe are quality products, quality assets again, and I can make some what I think are some smart trades. And I also had some money like that didn't go down. Like I put a lot of money in JLP. All my free cash was in JLP. So it probably would have done slightly better if I had just left it in cash, but it only went down about 11%. So while the rest of the market went down 50%, sometimes more. So now I have that buying power. I added some Jupiter yesterday. Again, I'm not telling anybody to do it. I'm just saying what I did. I bought some Jupiter yesterday with some JLP. Why? Because Jupiter is down from $1.20 something to 35 cents. 35 cents now to 35 cents. It's a third, less than a third. It's almost a quarter of what it was. And JLP is down 11%. So that worked out. It was 3-1 when I bought JLP. It was 3-1 for JLP. I bought it at 9.6-1 yesterday. So to me, that makes sense. And so those are the kinds of things I do. I just don't really care what the day-to-day crap is. I just want to know When is that zone where I can buy and I'm not worried about the outcome? And when things are going up, I feel uncomfortable buying stuff. I start going, wow, crap, should I diversify? When things are going down, I'm like, okay, I can buy again. Everyone will reach this point where you feel okay that you can buy again. It's just going to be, it's different for everyone. For me, I think we're pretty much there. So I've started buying stuff again. I feel good about it. But I think I'll feel better about it after tax day. I think a lot of people feel better about it after tax day. And some panic rate cuts and some other stuff. Remember, in the stock market, bad is going to be good again. And Jerome Powell can say all he wants, oh, we don't follow the stock market. We're a bull crap. Bull crap. Why? Because they're all in it. They're the same dudes that are insider trading. They're all in on it. Of course they follow it. Why? Because no one is devoid of psychology. And like kind of Howard, some of your comments, like, it is tough to separate yourself from the money. It's hard. But think about this. Hopefully no one here is in this position. Hopefully everybody here is in a position where this is capital you don't need to live. Think about the people that are going through these strains, and it's the money they have to pay rent, for food, for like shelter costs, like their vehicle. Think about that. Those are real problems. We don't have real problems. None of us here, hopefully, have real problems. These are ephemeral problems. Oh, my investment portfolio. Yeah, we'll be fine. Crypto go up. Number go up. But for the people that are like housing insecure, food insecure, go down the list of things that people don't have that demonstrably, that affect their day-to-day life. That's rough. And guess what? All those meme coin traders, that's them. Oh, crap. Yeah, oh, crap. Now you can't pay rent. Now you got to go drive 6 more hours a night, you jackwagon. Like, that's what's going on in the real world. Luckily, we're not there. So be thankful that we have this space where we can compartmentalize our emotional chaos. And it's not, I can't pay rent. I can't put food in my kid's mouth or whatever, whatever. I don't have kids, but you see what I'm saying? So yeah. There's even in a down market, there's quite a lot to be thankful for. And this is the only market where you can get really, really rich, really, really quick, period. So I feel kind of positive and upbeat today. I know everybody's like, oh man, I'm like, I feel good. So I'm kind of excited. It's time to start shopping again. So let's see. Oh, you did. Did you green 25% of your JLP for Jupe? Okay, I went 50. Yeah. I went like somewhere 15 or 16%, and I'm gonna keep watching, and I may do a little bit. Yeah. So anyway, there we go. All right. Let's call it a day. We'll see you guys tomorrow. Stay in school. Don't do drugs. Don't do anything that my poor, insolvent, drunk, struggling on meth grandmother, who will definitely steal your wallet if she has just even a chance of it. Let me see. Let me get back. Oh, wait. That's not supposed to be there. That's supposed to be. Bam. Digital investor. Okay. We'll see you guys tomorrow. Woo woo. Never get upset at you, Howard.